This chart illustrates how traders use the Gann Fan or Fibonacci fan tool to predict future price movements and identify key support and resistance levels in a downtrend. The analysis begins from the highest visible peak on the chart, which is highlighted with the label "Highest Peak is Better Choice." This point is critical because starting the fan lines from the dominant swing high ensures the accuracy of the entire prediction. From this peak, multiple diagonal lines are drawn downward at specific angles such as 10 dig, 30 dig, 50 dig, 70 dig, and 90 dig. These lines represent different rates of price decline and act as potential resistance zones as the price moves downward. After the highest peak, the chart shows a strong bearish movement, where red candles indicate sellers pushing the market lower. The price tends to react or slow down near these fan lines, creating natural areas where short-term reversals or consolidations occur. Each intersection of the price with a fan line marks a key reaction level, helping traders understand how the market respects these geometrically derived support and resistance levels. The shaded red region represents the area under observation for prediction, with the horizontal percentage markings such as 10, 33, 50, 70, and 90 showing how deep the retracement has gone. Toward the lower right side of the chart, there is another circled area marked as "Our Interest for Prediction." This zone indicates where traders expect a possible reversal or buying opportunity after the downtrend. The convergence of several fan lines around this area creates a point of confluence, suggesting that the market might find strong support here. This is where professional traders look for confirmation signals, such as bullish candles or pattern formations, to anticipate a trend reversal. The chart plots price movement over time, identifying a significant high point labeled peak. From this peak, 3 descending trend lines are drawn at different angles to project potential support levels and gauge the momentum of the subsequent downtrend. These lines are defined by their slopes marked as 1y1, 1x2, and 1y3, representing progressively steeper descent rates. The core concept is that the slope of a trend indicates its speed. The steeper the line, e.g., 1x3, the faster the price is falling. The areas where the price action is clustered near these lines are annotated as high-speed area, suggesting these are zones where the price was declining rapidly. In practice, if the price were to break above one of these descending fan lines, it would signal a potential slowdown in the downtrend and a possible weakening of the bearish momentum. The chart is a continuation of the previous analysis, focusing on the angle of the trend. The key feature is a trend line drawn at a 45-degree angle, which is a classic benchmark in technical analysis known as a Gann angle, representing a perfect balance between time and price movement, a sustainable, ideal trend. The price action is seen respecting this angle, using it as dynamic support or resistance. The sidebar of the trading platform is visible, showing the current month of May and a list of days, along with essential tools for a trader such as the screener, Pine Editor for coding custom indicators, Strategy Tester for backtesting, and the trading panel. This setup indicates that the user is actively analyzing the market, using the 45-degree angle as a guide to assess the trend's health and potential future price movements. The chart captures a critical moment where the price, after a period of decline, has broken above the primary 111 speed resistance line, the 45-degree angle line from the previous chart. This breakout is a major technical event, indicating a potent shift in momentum. The move is contextualized by a significant swing high in the recent past, which likely served as the origin point for the descending fan lines. The break above the 1x1 line suggests that the prior downtrend is no longer operating at its original balanced speed and that bullish momentum is now taking control. In essence, this chart shows the successful trigger of a reversal signal, where the price action confirms a change in the trend's character by overpowering a key dynamic resistance level. The chart illustrates a counter-trend or reversion strategy following a powerful downtrend. The price is seen breaking above the steepest speed resistance line, the 1Kong4 line, which signifies an extremely overextended and fast move. The annotation notes that this breakout was by more than 20 pips, which is identified as the signal to take profit on an existing short sell position. The sell entry was placed at a prior swing high, anticipating that the downtrend would continue, with a stop loss, SL, positioned above that level. The logic here is that even in a strong downtrend, prices cannot fall indefinitely without corrections. The break above the very steep 1x4 line is not interpreted as a trend reversal, but rather as an excessive correction, a blow-off, that offers an optimal opportunity to take profits on the short trade before the price potentially resumes its downward move or enters a consolidation phase. The chart shows the price, after a period of upward movement, decisively breaking below the primary 111 45-degree speed resistance line. This breakout is a key technical event, indicating a fundamental shift in momentum from bullish to bearish. The trade setup is clearly marked. A sell entry is placed following this breakdown below the 111 line. This signal is given greater context by a significant swing low in the price history, which likely served as the anchor point for the ascending fan lines. The break below the 111 line suggests that the prior uptrend has lost its ideal, balanced momentum and that selling pressure has now overwhelmed buying pressure. In essence, this chart captures the moment a sustainable uptrend is invalidated, providing a strategic entry point for a short, sell position in anticipation of a further decline.